Since the release of our new documentary Meltup, which received 500,000 views in less than 3 weeks, the U.S. national debt has risen to over $13 trillion. During the recent weeks, the Dow Jones has declined by over 500 points, with the price of gold holding strong above $1,200 per ounce. The Dow Gold ratio is now down to 8.4, a new low for 2010. NIA believes the Dow Gold ratio could decline to as low as 7 in 2010 and down to 1 by the time the upcoming hyperinflationary depression is over. With stocks in decline, the mainstream media has shifted from saying we are experiencing an economic recovery to now saying we are at risk of a double-dip recession. NIA has said in Meltup that if stocks were to see a nominal decline one last time, we will likely see Bernanke shoot up his largest ever dose of quantitative easing, which could turn the current Meltup into hyperinflation. We are seeing signs of this coming true already. Larry Summers, senior economic advisor to President Obama, has asked Congress to begin drafting a new $200 billion stimulus bill. Most attention on Wall Street today is still being paid to the debt crisis in Europe. The European Union and IMF recently put together a 110 billion euros package for Greece. If you do a search on Google for Greece debt crisis, there are now 16.5 million web results and 1,600 news results. If you do a search on Google for US debt crisis, there are only 591,000 web results and only 15 news results. This is pure insanity. The US has a GDP that is 41 times larger than Greece, and our debt crisis is much worse. The only reason Greece is being forced to deal with their debt crisis a lot sooner than the US is Greece doesn't have access to a printing press that they can use on their own. While Greece, Spain, and Italy are now taking the necessary steps to cut spending and reduce their deficits to a smaller share of GDP, the U.S. posted an $82.69 billion budget deficit for April, up 295% from 1 year ago and more than twice what most economists were forecasting. Even former Federal Reserve Chairman Paul Volcker is now warning that the time is growing short for the U.S. to address its budget deficit. The U.S. dollar index is now at a 52-week high of 87, which Federal Reserve Chairman Bernanke believes gives him the license to keep interest rates near zero and print money. Canada's central bank just raised its interest rates from 0.25% to 0.5%, but the Federal Reserve has shown no indication that it will raise interest rates anytime soon, with its last interest rate increase taking place all the way back in June of 2006. Canada's economy is now one of the soundest in the world, due to the soaring demand for copper, gold, wheat, and oil from emerging nations like China and India. India's GDP just grew by 8.6% in the first quarter of 2010, due to manufacturing activity in India rising to its highest level in 27 months. Meanwhile, the U.S. manufacturing sector accounted for 24% of mass layoffs of April. The total number of U.S. employers cutting 50 or more employees increased by 228 to 1,856 in April, with 448 of them taking place in the manufacturing sector. The economic imbalances in the U.S. have been continuing to grow larger. Americans are now receiving 41.9% of their income from private wages, down from 44.6% in December of 2006 and 47.6% in the first quarter of 2000. Americans are receiving 17.9% of their income from government programs, up from 14.2% in December of 2007 and 12.1% in the first quarter of 2000. While the U.S. Treasury sold $78 billion in new government debt in May, companies sold only $66.1 billion in corporate debt, the least since December of 2000. The extra yield investors demand to own corporate bonds over government bonds increased by 44 basis points in May to 193 basis points, its largest increase since November of 2008. While most Americans still don't understand the true nature of the impending currency crisis, a growing number of Americans are becoming educated to the truth. American Eagle silver coin sales reached 3.6 million in the month of May, a new record. Annualized demand for American Eagle silver coins is now greater than annual U.S. production of silver, with the world beginning to figure out the need for gold and silver as real money as fiat currencies around the globe get debased. Caterpillar is now sold out of many of its mining vehicles until 2011. There are even some signs of our government trying to move in the right direction. Congressman Alan Grayson recently sponsored a new bill, H.R. 5353, the War is Making You Poor Act, to reduce the $159.3 billion from the discretionary overseas contingency operation funds in the President's fiscal year 2011 budget for operations in Iraq, Afghanistan, and Pakistan, and amend the Internal Revenue Code of 1986 to provide individuals a War is Making You Poor tax credit against the savings attributable to the overseas contingency operations reduction.
Let's be clear about that. Let's be clear about what I said. With the money that is being saved by the War is Making You Poor Act, we can give $35,000 of every American's income. We can make that tax-free, and $70,000 for married couples. And in addition to that, it takes the remaining money and reduces the federal deficit and the federal debt.
This bill already has 18 co-sponsors, including Congressman Ron Paul. To be kept up to date with the latest facts and truth about the U.S. economy and inflation, sign up for the free NIA newsletter at inflation.us.